Happy Friday. Mortgage rates opened this morning at 6.87, down from last week's 6.97. And where, yes, markets are closed today in observation of Good Friday, and it was a relatively short and quiet news week, the fact that there was really no news was finally good news. It was as if mortgage rates had an opportunity to breathe. This week, we want to cover on really what we're seeing kind of in the pipeline going forward as far as Fed decision, what impact these tariffs could potentially have on overall monetary policy, and lastly, how our buyers and sellers can be prepared for the approaching faster than we can expect spring buying and selling market. So let's dive into it. Whereas I mentioned earlier, yes, it was a relatively quiet news week. The headlines that did come across were centered around, of course, tariffs, but also the potential impact in currently weakening dollar and what that means for Fed policy here domestically and also abroad. So let's dive into that. First things first, as we know, over the last few weeks, the talk of the town and the driver of volatility was the tariffs and really the lack of clarity around the tariffs. With that, we've seen some concern despite CPI, Consumer Price Index report coming in earlier this month, lower than expectation, is that those tariffs will have impact on future inflation. That has also spilled over to a potential weakening dollar as we're seeing across the geopolitical scene. And now the concern on that is, what will the Fed ultimately do? As we saw this week, our European counterparts cut rates at their central banking sector. And yes, the administration has called on our Fed to cut rates as we've seen the dollar depressing, oil declining, as well as demand across the board deteriorating, which is typically indicative of a Fed intervening by cutting the cost to borrow. Now, that has not happened. And where this week, again, as I mentioned, headlines were very quiet, there was no huge data points being released. The call now is for our Fed to respond like our European counterparts. That being said, bonds kind of shoved off the noise, if you want to call it, and ultimately were able to settle and come down, which is why we're seeing interest rates open this morning lower than where they were last week. It's as if, hey, yes, there's a ton of noise percolating across the water cooler or whatever we want to call it, but without any concrete data or any new reports, if you want to say, it's, hey, we're going to settle and we're going to just kind of hold the line until we see new information that will either confirm or deny the narrative that's going around town. So for now, the opportunity that presents to our buyers and sellers is, hey, yes, last week we were talking about rates in some instances above 7. We're back below 7 into that 6 range. And yes, as we approach the spring market, or here we're in the spring market, buyers can now have an opportunity to take advantage of these lower rates. We know that there has been a tremendous amount of clients that have sat on the sidelines through the course of this cycle. And the fact that rates are now fundamentally lower, their opportunity to take advantage of the rates that are here now can set themselves up for future success. Additionally, for our sellers, we've seen an increase in new inventory now, albeit it is still not to the levels that we would see, pre-pandemic. But the fact that rates are lower, it's opening up channels just like our buyers for sellers to put their home on the market as we approach kind of this peak in season. So here, the best advice we can continue to give our clients is to be prepared. So with that, ensuring that the approval that has been done by their mortgage professional is up to date and that they are aware of really this emerging market to ensure that they're able to capitalize on any and all activity that may present itself. With that said, we will continue to monitor this evolving scenario as it seems to be changing and evolving on a day-by-day basis. But definitely stay tuned, subscribe, like, and ensure that you're being informed as to what the market is doing. As always, let's make it a fantastic Friday. Happy Good Friday, happy Easter weekend, and we'll see you all next week.